A very bad start to the week. Losses on Monday, Tuesday and Wednesday. A bit of a turnaround yesterday, and it looks like we are going to end the week on a positive note, doesn't it?
Yes, absolutely. Some good news coming out of the United States yesterday spurred the market on, and we saw a reduction in the jobless claims to a one-year low of about 5.16 million, and then the trade deficit, which narrowed about 8% on the back of exports increasing there, and also China coming out today looking good, where we saw industrial output increasing by 19.2%, which is much better than expected, as well as the CPI being in positive territory now for the first time in 6 months. So a very good opening for the global markets.
Now, of course, we started the week with more worries about Dubai's debt problems. We had Greece's downgrade of its debt, and also problems raised with Spain's debt. That all seems to be water under the bridge now as we head towards the end of the week.
Yeah, I think that gave us a lot of jitters, and especially because there was also rumours that, you know, the UK and the United States may also face some jitters, but Moody coming out there saying that no, that's not going to happen. No downgrades are expected in the UK and the United States. But then just looking at that, you know, it has cast some doubt onto emerging markets and, you know, the governments and what is happening with the governments. They saw what happened with Dubai and last week, and that, you know, has put in a lot of risk aversion into the markets.
Are we starting to see an increase in risk appetite, a bit more stability in the markets, or do you think we're still going to see those shocks as the year progresses?
I'm sorry, can you repeat that, please?
Do you think we'll still see shocks like the Spain and Greece problems, like Dubai, continuing to push the markets weaker from time to time?
Yes, absolutely. And, you know, I think going forward will be, you know, a big attention will be paid to emerging markets, or the weaker of the developed markets, to see where they're standing and what will happen. So, you know, we don't know whether this is the last of it, you know, and going forward, you know, we're at the end of the year, and investors are getting a little bit nervous right now because there's thin trading that we'll be facing. And, you know, when things like this come out, it just brings a lot of jitters and a loss of risk aversion into the market.
Of course, we know this is the last full week of trading on the JSE. Next week we have it broken by a public holiday, then of course Christmas the following week. Are we starting to see volumes dwindle as the year draws to a close?
Absolutely. You know, we're going to definitely see that, especially after closeout next week. You know, when people go on holiday, and you know, and just portfolios are cleaned up, if anything. But yeah, we're going to see low volumes going forward, and you know, and just in preparation for the festive season.
Of course, we are expecting more US data out this afternoon. Just before the JSE closes, we're getting University of Michigan consumer confidence figures and also retail sales data out of the United States. Do you think that could really influence how the JSE closes today?
Absolutely. I think we're expecting a bit of a pullback towards mid-afternoon trading as we await those very important retail sales data coming out, as well as the confidence data coming out there. So it will definitely affect us, and especially on the back of the jobless numbers that came out yesterday that were better than expected. You know, it will be all focus right now will be on those retail sales to see what the American consumer is doing, and what business believes is going to happen, and where the confidence levels are.
I've seen a bit of stability return to the gold price, but really earlier this week it was down $100 from the high it hit last week of $1,226 an ounce. We've seen it improving a little bit. How about the other commodities? Are they also still under pressure?
Yes, definitely under pressure. I mean, oil hit its high of just beyond $79 last week Tuesday, and platinum also just beyond $1,500 last week Wednesday also. And we have seen that pull back quite a bit. It is up at the moment from the beginning of the week. So we've seen a vast improvement as you know, a little bit of risk is abated after all the Spain, Greece, and Dubai issues that came out. But you know, we are seeing a better levels, and going forward next week we expect it perhaps to stay around about the same levels or climb back to its previous highs.
Now, we saw banks globally under pressure earlier this week, particularly due to those Dubai problems. Our own financials have also been under pressure, but we have seen a bit of a recovery there. Standard Bank recovering, ABSA was up very nicely yesterday, and Old Mutual also coming back a little bit after big losses on Wednesday.
Yes, I think what happened is an international thing for the banks. I know in the UK they're having a little bit of problems. They're trying to see their exposures to Dubai World and trying to restructure themselves accordingly. But but South African banks have done well, recovered quite a bit, and they were under pressure before and were not the best performing stocks. But now we're seeing a better recovery from there, particularly Standard Bank with what's happening in Angola, as well as the 2-year loan facility that they've got from Taiwan. So, a good showing there from Standard Bank. And going forward, I think, the banks will perhaps perform a little bit better.
Well, just going into next week, a shortened week because of the public holiday, we do have some data coming out. We have CPI and PPI coming out ahead of Christmas. Do you think that's potentially market moving, or do you think everybody will be on holiday by then?
Well, I don't know about market moving because we so react to what happens in the United States and globally more biased. But I think, with CPI next week, we're expecting it to be either the same at 5.9% but to remain within the target band of 3 to 6%. And, the only inflationary risks that we have is imported inflations from the commodities as well as electricity and wage settlements. And then also looking at PPI, still deflationary there, but we expect it to be a little less negative than what we saw last month.